Hello, and welcome back to our channel. Today, we're diving into a topic that impacts every one of us: how geopolitical conflicts and economic changes affect our finances and investments. Throughout this video, we'll show you 3 specific investment options that are considered safe in times of uncertainty, along with their advantages and drawbacks. So, if you're wondering how to better protect your finances, stick around until the end. You know, when we talk about geopolitics, it sounds complicated, like something out of a political thriller, right? But really, it's just a fancy way of saying countries and their relationships. And those relationships, believe it or not, have a huge impact on your money. Think about it: the United States, China, Russia, these are like the heavyweights in the global economy. When they make a move, the whole world feels the ripple effect. Take the US and China, for example. They're in a constant tug of war over trade, technology, you name it. And every time one of them throws a punch, whether it's tariffs or sanctions, the markets freak out. Or look at what's happening in Europe right now. The conflict there has sent energy prices through the roof. And that's not just some abstract number on a screen, that's you paying more at the pump, more for groceries, more for everything. And it's not just about these big dramatic events either. Even small policy changes in one country can have a domino effect on the global economy. It's interconnected, you see. So, how do you navigate this complex web of international relations and protect your hard-earned money? Well, the first step is understanding the game. Who are the major players? What are their motivations? What are the potential risks and opportunities? Once you have a handle on that, you can start to make informed decisions about where to invest your money. Because here's the thing, ignoring geopolitics is like trying to sail a ship without a rudder. You might get lucky for a while, but eventually you're going to crash. So, let's dive into some specific examples of how geopolitical events can impact your investments. Remember those US-China trade tensions I mentioned earlier? Well, let's say you're invested in a company that manufactures smartphones in China and sells them in the US. If those two countries slap tariffs on each other's goods, your company is caught in the crossfire. Their costs go up, their profits go down, and guess what? The value of your investment takes a hit. Or let's say you're invested in a company that relies heavily on oil and gas. Suddenly there's a major conflict in the Middle East and oil prices skyrocket. Now that company might be raking in profits, but it also means you're paying more at the pump every time you fill up your tank. It's a double-edged sword. The point is, geopolitics matters. It's not just some abstract concept that only diplomats and politicians need to worry about. It affects your money, your investments, and your daily life. So, pay attention. Do your research. And most importantly, don't be afraid to adjust your investment strategy as the world changes around you. Because in this game of global chess, the more informed you are, the better your chances of coming out ahead. Okay, so we've talked about how geopolitics can impact the global economy. But how does that translate to your everyday life? You've probably noticed it already. The price of everything seems to be going up. Groceries, gas, rent, it's getting more and more expensive to just get by. That, my friends, is inflation in action. And it's not just some random phenomenon, it's directly tied to those geopolitical events we were talking about earlier. Remember those supply chain disruptions caused by the pandemic? Or the rising energy prices fueled by conflict? Those things have a ripple effect throughout the entire economy, driving up the cost of goods and services. And it's not just about the things you buy. Inflation also erodes the value of your savings. Think about it. If the price of a gallon of milk doubles, the money you have saved up buys you half as much milk as it did before. So what can you do about it? Well, the first step is to be aware of the problem. Don't just bury your head in the sand and hope it goes away. Next, take a close look at your budget. Where can you cut back? Are there any unnecessary expenses you can eliminate? And finally, consider investing in assets that can help you hedge against inflation. We'll talk more about that in the next chapter. But for now, let's talk about some of the specific ways that economic uncertainty can impact your daily life. Have you tried to buy a car lately? The used car market is insane right now, with prices through the roof. That's partly due to supply chain issues, but it's also because people are worried about inflation. They're thinking, if I wait to buy a car, it's just going to be even more expensive later. Or how about housing? Rent is skyrocketing in many cities, and it's getting harder and harder to buy a home. Again, this is partly due to low supply and high demand, but it's also because people see real estate as a safe haven during times of economic uncertainty. And then, there's the stock market. Volatility is the name of the game these days, with the market swinging wildly up and down in response to every bit of news. That can be nerve-wracking for investors, especially those who are approaching retirement. The bottom line is, economic uncertainty can have a real impact on your life, but it's not all doom and gloom. By being aware of the risks and taking steps to protect yourself, you can weather the storm and come out ahead in the long run. So don't panic. Just be smart, be informed, and be prepared. Chapter 3. Safe investment options. Alright, so we've talked about the risks. Now let's talk about solutions. How can you protect your hard-earned money in these uncertain times? Well, the good news is that there are several investment options that are considered relatively safe, even during periods of geopolitical turmoil and economic volatility. Today, we're going to focus on 3 of them: U.S. Treasury bonds, dividend stocks, and real estate. Let's start with U.S. Treasury bonds. These are basically loans that you make to the U.S. government. You lend them money, and they promise to pay you back with interest. Now you might be thinking, why would I want to lend money to the government? Well, here's the thing. U.S. Treasury bonds are considered one of the safest investments in the world. That's because the U.S. government has never defaulted on its debt. In other words, they've always paid back their loans, even during times of war and economic crisis. So if you're looking for a safe place to park your money, and you don't need immediate access to it, U.S. Treasury bonds can be a good option. However, there are a couple of downsides. First, the returns on Treasury bonds are relatively low. You're not going to get rich quick investing in these. Second, Treasury bonds are not very liquid. That means it can be difficult to sell them quickly if you need to access your money. So, they're a good option for long-term savings, but not so much for short-term needs. Next up, we have dividend stocks. These are stocks in companies that pay out a portion of their profits to shareholders on a regular basis. Think of it like getting a paycheck from your investments. Now, not all stocks pay dividends, but those that do tend to be in more established, stable industries. For example, companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble have been paying dividends for decades. The great thing about dividend stocks is that they provide you with a steady stream of income, even if the stock market is down. Plus, many dividend-paying companies have a long history of increasing their dividends over time. That means your income potential can actually grow over the years. However, it's important to remember that dividends are not guaranteed. If a company's profits decline, they may cut or even eliminate their dividend. So it's important to do your research and choose dividend stocks carefully. Finally, let's talk about real estate. Real estate has long been considered a safe haven asset. That's because it's a tangible asset, meaning you can touch it and see it. Plus, it's a necessity. People always need a place to live, no matter what's happening in the economy. Now, real estate can be a great investment, but it's not without its drawbacks. First, it's not very liquid. If you need to sell your property quickly, you may have to accept a lower price than you'd like. Second, real estate can be expensive to buy and maintain. You'll need to factor in things like property taxes, insurance, and repairs. But overall, real estate can be a solid investment, especially if you're looking for something that can provide you with both income and appreciation. So, there you have it. 3 safe investment options to consider during times of uncertainty. Remember, there is no one-size-fits-all approach to investing. The best option for you will depend on your individual circumstances, risk tolerance, and financial goals. It's always a good idea to speak with a financial advisor to get personalized advice. So, which investment is best for you? Think about what makes sense for you in terms of stability, liquidity, and returns. If you enjoyed this video, don't forget to subscribe and share which option you would choose in the comments. Thanks for watching until the end, and we look forward to your feedback.